Good morning, Steve Free in Chicago with the morning grain comments. Well, happy Friday to everyone. Hope everybody has a good weekend. Certainly feels like fall around here with harvest moving along. One person yesterday drove from central Indiana across to central Illinois and up into Wisconsin and said that it looked like in Illinois, farmers there were about 10 days from completing the corn and soybean harvest. Certainly the weather over the next 2 to 3 weeks is going to be favorable to get harvest done. And yesterday there was a little bit of harvest pressure that maybe caused the markets to back off from its recent highs. We also note that this dryness is delaying some of the winter wheat plantings for next year, and there's not a lot of rain forecasted for the southern plains. We also note that parts of Brazil is dry in the north, wet in the south. Argentina is dry, but our weather guy is convinced that the conditions down there will improve over time. Market also heard in a European conference that odds were beginning to favor Russia extending the export corridor, and I think that weighed on wheat prices. We also note that there's as much as 64 vessels that are either there or on the way to Ukraine to load to grain. That seem to offer more weakness to wheat, while most of the grain shipped out of Ukraine right now is corn. We'll also be watching pretty closely any news out of Russia, with Ukraine taking over more of the Russian annexed territory, and the president of Russia coming out and saying that he will try to stabilize that annexed territory. It raises concern about the next step that the president of Russia will do in the Ukraine war. We'll also be watching next week the USDA report. Markets looking for lower corn and wheat carryout numbers and higher soybean carryout numbers. We'll also be seeing if they adjust the U.S. corn and soybean crops. Yesterday we had one crop analyst lower both their estimate of U.S. corn and beans. Most analysts are looking for a little bit lower corn, a little bit higher bean numbers. We also got export sales yesterday, and the numbers were disappointing. I think that the fact that corn export commitment is running 50% behind last year is an indication that USDA has room to lower the corn exports in next week's S&D report. We also note that while bean exports commitments are above last year, the talk is that maybe future sales, especially to China, will bring the final export number for beans in below the USDA's number. Wheat export commitment running behind most years at this time, and leads some to believe that prices right now, especially Russian prices, are much cheaper than U.S., and that U.S. may also lose a little bit of the export numbers versus the USDA. Next week will be the Congress in China ruling on new leadership, and we have to watch that pretty closely as they continue to reduce their raw material import demand. Everyone have a good weekend. Everyone have a positive trading day, and we'll see what the markets bring next week, both on money flow and weather.